Yo, what's up you guys? Welcome back to another video. And in today's video, I do want to give you guys another update on the dollar index as we just received the PPI data. We've got some core retail and retail sales coming through there tomorrow as well. If you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the thumbs up for the YouTube algorithm. And in that way, you'll be helping out others there as well. Now, very important to keep in mind that we had also low inflation data that came through last week, which is ideally very good for the economy because when inflation's lower, it's less likely that the Feds are going to hike interest rate as aggressively, meaning that consumers will have funds available to spend. Thus, on companies listed on the stock market, and as a result of that, what you tend to see is an increase in the stock prices. However, this is not concrete and it doesn't mean it's going to last forever. We do have the PPI data that we are going to be discussing here today. Now, we can see the PPI data came through at 0.2%. The Empire State Manufacturing Index came through slightly higher, higher than expected compared to the previous month. Article from FX Street. Firstly, if you don't know what the PPI is, it's the producer price index, and it's basically used to measure the average change over time in selling prices received by domestic producers for their output. The prices that is included in the PPI are from the first commercial transaction for many products and home services. Now, this article over here says that the US annual PPI declines to 8% in October versus 8.3% expected. This is basically what we saw over here. And it says that producer inflation in the US rose at a softer pace than expected in October. The dollar index stays deep in negative territory is what we can see over here. However, still very bullish as we're trading above the previous price action, as we can see over there as well. It says here the producer price index for final demand in the US declined to 8% on a year-to-year basis in October from 8.4% in September. The data published by the US Bureau of Labor Statistics revealed on Tuesday this print came in lower than the market's expectation. The annual core PPI is lower at 6.7% from 7.2% in the same period compared to that. Now, the way the market reacted, the dollar index remained under heavy selling pressure of the PPI data, and it was last seen losing 1% on the day at 105.85, and that is basically what we saw last week. Now, like any other market, tomorrow we got retail sales and core retail sales, but like the rule number one is the market does not move like this. Sometimes due to high impact news it does, but we know the market moves in waves. Now, the same way we're going to see, so if this wave continues lower, and that's all dependent on what the Federal Reserve is going to say when they need to hike the interest rates in December, in combination with some other data that's going to pull through there as well. But the dollar index isn't just going to go because of the news and go blip. No, sometimes, not sometimes, but the market has to make impulses, corrections and impulses to the downside. That is how we identify a bearish market. Now, firstly, we can clearly see that the dollar index, as we can obviously identify over here, that the market had broken above this very strong structural level over here, and this level over here acted as a strong level of resistance. The market broke above that, came to test it as support. Also, if you take your Fibonacci from the low to the high, we are currently testing the 61.8 pullback. We are expecting bearish momentum based off the fundamental information, but we need to understand that a correction is expected because the market moves in waves like this. You see, doesn't matter if the dollar is weak. It doesn't mean just because it's weak it's going to do that. The dollar index will remain one of the most dominating currencies that you can find. On the weekly time frame, we can see how the market has just found very strong support, and we expect the market to pull back slightly, at least to that level, which will probably be the 0.382 if you take your Fibonacci from the high to the low of that massive impulse. Now we can clearly see that this is a very strong structural level, which is a 50% retracement, which is normally what you expect after the market printed a massive impulse because you expect a correction. And we can see that we do have this 50% level lining up perfectly with this previous level of resistance that was then support got broken. All of that supports one turn resistance, so we definitely expect a slight pullback before the continuation to the downside there once again on the daily time frame. What do we see now from a daily perspective? It's clear that we can see that the market had printed this structural level over here. Now it is important that we do get a clear daily close above this level to confirm the pullback in this market. Now, like I said, we have this massive impulse. If you take your Fibonacci from the high to the low there, this is at least where I expect the market to pull back to before seeing any continuations to the upside. So based off where I'm sitting now, I do expect the market to continue higher. It's very important to be reactive and not predictive because we are trading below this previous level of support. So we do not need to wait for the market to break above that level of support, then the resistance, and then on the retest, you can start looking for that buying opportunities. And in doing so, the market also print this inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. Next up, we do have the Nasdaq 100. Yeah, as well. Now on the monthly time frame, we can see that the Nasdaq has now delved literally deeper into where we anticipated to be. The market is now currently on its way to go and test that previous structural level that acted as resistance, support, resistance, support broke below that. All of that supports now once again turned resistance. The market also printed this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction by taking your Fibonacci from the high to the low of the massive impulse, and you can see the market has just pulled back to the 0.382, also breaking above this level of support that was turned resistance. I do expect the market to continue higher to go and hit that level, pull back, print an inverted head and shoulders pattern. That's obviously expected in the long term. Now, from a weekly perspective, we can see how the market is currently testing strong level of support as resistance, definitely giving us that, that confirmation that we do expect a pullback here as well. The market broke above this level of resistance. Once the resistance gets broken, it then becomes support. Once again, giving us a clear cut that we can expect the market to pull back. Now, here from a weekly perspective, from a daily perspective, we can see the market had printed this overextended W formation. Of the overextended W formation, normally expect a pullback. Now, the market had broken out of this consolidation phase. Now, it's very easy to argue that this candle over here had acted as a pullback. I do expect a deeper correction to take place as the market is currently testing previous level of resistance there as well. Now the best way to approach that is obviously wait for the market to pull back, hit that previous level of resistance that is now turned support. From there you can definitely look for that continuation, as hitting this level would take the dollar index back to that 0.382 level there as well. Before we get to that, I do want to speak about gold. Now gold here on the monthly time frame, gold's now digging very deep, and if you take your Fibonacci from the high to the low of this massive impulse, and if you look at the previous videos, I said we can expect gold to pull back to that level. That is kind of exactly where gold is sitting at the moment. The market printed resistance, support, came back to test it as a resistance. We do expect a slight pullback before any continuations to the upside. Now we can see over here, if we look left, we've got lots of structures sitting around this area. Gold also similar to the price action we saw on the Nasdaq, printed an overextended W formation. Often overextended W formation, you expect to pull back to the left leg before the continuation to the upside. We do have on the daily time frame, what do we have? Now here from a daily perspective, this is a very strong structural level, printed at support, resistance, broke above resistance. All of that resistance is now acting as support. Now I do expect the market to pull back to this level before potentially seeing a continuation to the upside for the market to go potentially hit that monthly level of resistance. Next up, we do have GBP USD. Now, if you remember, I've spoken about GBP USD when the market was sitting at this level over here, explain all of the reasons why we can expect the market to pull back higher. Printed support, broke below that. It's now back to test it as a resistance. The market also printed this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction by taking your Fibonacci from the high to the low, and you can see that the market is at the 61.8, and this is a monthly candle, so anything can happen there as well. From a weekly perspective, we can see that the market had broken slightly above that, but we haven't closed yet. Then the market's also currently testing this structural level that we can see over here. We are going to use that is the most recent structure, very close to the market there as well. Market also broken above the strong level of resistance, and once the resistance gets broken, it becomes support. giving us a further confirmation that we can expect the market to pull back slightly before a continuation to the upside. Now, on the daily time frame, this is the structure that the market had broken above, printed a massive impulse. After an impulse, you expect a correction, taking out Fibonacci from the high to the low of this massive impulse here before that slight correction that never took place. We do have a 0.382 that's lining up perfectly with that structural level over there. Now, the best way to approach this is obviously to wait for the market to give us a clear daily close below this level, as this will confirm the bearish move to the downside for the market to go and test that previous level of resistance that is now acting as a level of support there as well. Next up, we've got GBP AUD as requested by one of the YouTube members. We can see that GBP USD had broken below the strong level of support, came back to test it as resistance. However, the price action isn't very satisfying over here. As we can see, the market had basically been trading sideways here as well. So we basically have a market that had this massive wick to the downside, to the upside. We need to see some clear direction over here. We can't say this is a buy because the market is trading below the structural level and basically stuck in between these structural levels here as well. You can see the market had basically traded inside there, went down, came back up, then back into it again. And because we are here, that's quite difficult to say what the direction is over here. However, the best way to trade a consolidation market basically is what we have here. We can see here, if you check on the daily time frame, you saw the market had just moved in between these levels. Now, I would always say that the best way to approach this is to wait for a clear break above that. Then on the retest, you can even start looking for some buying opportunities. Alternatively, if you do break below this level, then on the retest, you can expect it to continue lower. However, with positive fundamental data that came through for GBP today, we definitely expect some bullish momentum on here. So I definitely expect the market to continue higher there as well. Next up, we've got GBP NZD requested from a YouTube member there as well. Same price action that we got over here. We've got a market that is basically moving sideways. The best way to approach this is clearly to wait for that break above that level, and on the retest from that level of the resistance that would then return support. We then start looking for that buying opportunities for the market to complete this impulse correction, an impulse pattern to the upside, for the market to also potentially complete this W formation at the right leg there as well. That's all from my side. Thank you for your time, and let's see if we can get this video to 100 likes, my good friend. And as always, cheers for the years.